my administration has been negotiating over the past 4 weeks. With this deal,
How does the trade deal between the United States and United Kingdom ripple through steel mills, grocery stores, and your retirement account? Well, in this Invest Nowdy video, I'll break down 10 of the most important quotes from President Trump's recent conversation about the UK-US trade deals. And for each one, I'll give you a key economic insight. This isn't about politics. It's about understanding how global deals shape your daily life, from the prices you pay to the sectors your investments depend on. We're counting down from 10 to 1, and each quote reveals a different piece of the puzzle, so make sure you stick around until the end. Now, let's dive in.
with this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle of international trade. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers.
This quote establishes the core philosophy behind the agreement. Reciprocal liberalization. When two nations lower trade barriers together, they each gain access to each other's strengths. In this case, UK consumers will now see more American products, particularly food. Agriculture is especially sensitive to trade because it's seasonal, price volatile, and often subsidized. By increasing foreign demand, American farmers may enjoy more stable prices and higher incomes. Now, what's being done about hidden trade barriers?
In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products. But this is now turning out, I think, really to be a great deal for both countries because it'll be really great for the UK also. So they're opening up the country. Their country is a little closed, and we appreciate that. They'll also be fast tracking American goods through their customs process, so our exports go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways.
Non-tariff barriers, things like packaging laws, ingredient restrictions, or slow inspection systems, often block trade more efficiently than tariffs. Economists see these as regulatory frictions that limit efficiency. By removing them and speeding up the process, the UK is essentially reducing the cost of doing business for American exporters. This benefits producers, but also end consumers, who may see lower prices or more choices. But what about more complex industries?
So good for both countries, and we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed. And they'll end up getting products that they'll be able to price. And if they like them better and we make great products, they'll be buying those products, but they were not available in the UK.
This speaks to comparative advantage, the idea that each country should specialize in what it produces most efficiently. US firms excel in advanced manufacturing, especially in heavy equipment and industrial input. Giving UK businesses access to this machinery could boost their productivity while driving American exports. Over time, this can improve trade balances and support jobs in the UK and the US. Next, we explore how trade and national security are interconnected.
Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that because it's been a great ally, truly one of our great allies. I mean,
This is more than a symbolic gesture. It's a shift towards strategic economic partnerships. By aligning trade with security goals, countries like the US and UK aim to build more resilient supply chains, particularly for sensitive sectors like steel, semiconductors, and defense technologies. Economists call this geo-economic coordination. It also reflects a reaction to recent global disruptions, such as geopolitical tensions. Let's now look at steel, a key national security material.
both countries have agreed that the economic security is national security and will be working together as allies to ensure that we have a strong industrial base, appropriate export controls, and protections for key technologies and industries like steel. Steel is a big factor. Both countries will become stronger with steel and things necessary for military. We used to build ships and other things literally at a level that nobody's ever seen. And
Steel is more than just construction material. It is a strategic commodity. It's essential for defense, infrastructure, and industrial production. The speaker here is advocating for a return to domestic steel strength, what economists refer to as reindustrialization. This reflects a broader desire to reverse decades of deindustrialization and bring back critical supply chains. Next, we examine one of the largest sectors to benefit from the deal: aerospace.
So if you go step by step, aero and commercial planes, they sell Rolls-Royce engines to Boeing. We've agreed to let Rolls-Royce engines and those kind of plane parts to come over tariff-free. And what you're going to hear today is there's going to be an announcement in the UK that they are buying $10 billion worth of Boeing planes later today. But I'm going to let the name of the airline announce it because that's theirs to do it. Part of this deal was always to do it together and to do it strong.
This represents bilateral trade balancing. The US allows aerospace imports from the UK, engines and high precision parts, while the UK commits to buying American aircraft. This helps both sides protect high wages and high skilled jobs. It's also a sign of deep sectoral integration, where countries rely on each other's strengths and capabilities within the same value chain. We'll now move from airplanes to automobiles, another sector seeing major change.
He agreed they could send 100,000 cars into America and only pay a 10% tariff. And that protects their car industry. And remember, we do 16 million cars a year. So this is only like 0.6%. But for the UK auto people, this is tens of thousands of jobs that the president agreed that he would protect for them. So he made that deal.
Here we see a compromise: managed access. The US accepts more UK vehicles, but caps them to limit disruption to domestic automakers. In economics, this is a quota tariff hybrid, where both price, or tariff, and quantity, or quota, are used to control imports. For UK manufacturers, this helps maintain jobs without risking market exclusion. Up next, we examine a once collapsing sector now being revived through intervention.
Then steel and aluminum, right? Their steel business has been destroyed like everybody else has been destroyed by people dumping steel into their markets. And British Steel had announced it was closing down. So the British government, as part of this deal, nationalized British Steel, and they're going to match the kinds of models we do. They'll put tariffs on, they'll put quotas on. They want to do it with America so they can be part of the resurgence of steel and aluminum in America. And that saves them, again, thousands and thousands of jobs.
Government nationalization is a bold form of state intervention. It typically happens when private markets fail to preserve socially critical industries. Here, steel is seen as too important, both economically and militarily, to lose. The UK's move mirrors historical US protectionist policies and signals a shared desire to coordinate industrial policy. Next, we turn to a broader question: how does all of this affect your investments?
I think we can say that we'll be close to $10 trillion of investment. I think we're actually at that number now if you add up some of the ones we haven't heard about yet. I mean, we have some going up right now. They have plants going up and they haven't even spoken to us. They're doing it because of the tariffs.
This statement connects industrial policy with foreign and domestic investment behavior. Tariffs, while very controversial, can serve as a blunt tool to bring manufacturing back home. The logic is simple. By making it more expensive to import, companies are incentivized to build locally. While the $10 trillion figure is likely rounded and includes long-term projections, the trend aligns with the rise in reshoring and factory construction in recent years. Let's finish with where this is all headed.
So I was very impressed by that. But we're going to take it to new levels. It's a very big deal right now, but I think is going to grow just of its own volition. It's going to grow. And over time, there'll be changes made. There'll be adjustments made because we're flexible. We'll see things that we can do even better. But it's very conclusive.
Trade agreements are not static. Economists often refer to them as living frameworks, where flexibility allows for evolution. As trade grows and industries shift, deals like this one provide structure for deeper cooperation and adjustments down the line. That adaptability is key in a fast-changing global economy. Whether in tech, agriculture, or defense, this framework sets the stage for long-term alignment, with room to expand as conditions change. As we've seen today, this trade deal goes far beyond beef and cars. It's about how nations balance growth, jobs, security, and long-term strategies. If you enjoyed this type of content, please like, subscribe, and drop a comment below. Which sector do you think will grow the most from this deal? And stay tuned. In the next episode, we'll be diving into more big-picture economic analysis that could impact your investment. Thanks for watching, and I'll see you in my next video.
Thank you very much, everybody.